Hey guys, welcome to the Smart Venture Podcast. In each episode, we're going to have conversations with some of the top investors, superstar founders, as well as well-known tech company executives in Silicon Valley. We'll have a coffee chat with them to learn their way of thinking and actionable tips on how they build or invest in a successful company. Before we start our show today, I want to make sure the listener, aka you, understand that everything a person say on the podcast only reflects hers or his own opinion, not the show or the company they work at. Today, our guest is a general partner at Foundation Capital. He invested in LendingClub, LendingHome, and many successful fintech-related companies. He was featured on the Forbes Midas List and my book, How to Be a VC. His name is Charles Moldow. Welcome back to the second part of the conversation with Charles. In last episode, we talked about Charles' career journey before getting into venture capital and how he meet and recognize some of the greatest founders in fintech. In this episode, we'll continue the conversation about how Charles navigates the VC career. Speaking of a strong network, imagine I'm a later stage investor. Can you sell me one of your portfolio companies?
I can do it, of course.
Of course.
I want to push back a little bit because I'm probably better at doing that than most people. Part of it is because I've been pitched 1,000 times, whatever the number is.
Yeah.
But also, everybody's got their different talents and skills, and I feel like one of my stronger skills is the ability to communicate an idea or a thought in a pretty crisp fashion. But in our business, no investor should ever invest in one of my companies based on what I'm telling them. They need to invest on the CEO's ability to pitch that business and to tell them. Because at the end of the day, the CEO is always selling. He's selling investors, and his number one job is to make sure that the company has money so it doesn't go out of business. He's obviously selling future employees because he's got to go recruit his team. And if he can't convince people to go join, he'll not be able to build a very good team. He's selling customers, particularly early on when his product or service is in its nascent stage. And so one of the most critical skill sets of an entrepreneur is the ability to sell at some level. And so I don't ever want a venture friend of mine to listen to my pitch on a business. I want them to listen to the CEOs, but I will tell you that the thing that I always focus on, if I were to pitch a business, is to try to convey the kind of the unique insight, the thing that makes that company special more than all other companies. Why does it deserve to exist, and what is it doing that's challenging and insightful that other companies don't see?
Among all the CEOs you've invested in, who is the person with the most ability to sell?
Well, if you look at track record of kind of valuation relative to business, I'd have to say that Renault has always been able to kind of raise dollars at premium valuations. Matt Humphrey probably at LendingHome, probably similarly so. How they do it is subtle.
One of your most recent portfolio companies is States Title. They recently acquired majority of North America Title Group. How does a smaller size tech company acquire a larger traditional business?
Yeah, it's certainly an unusual transaction. I don't know that I've ever seen it since, and I was pretty doubtful that we'd ever be able to pull it off. But I think we were able to succeed because the owner of the existing incumbent business, NATC, North American Title, was Lennar Group, which is a home builder. So it was what's called a captive insurer inside of Lennar, insuring its new homes. And they understood that business was a no-growth, modest margin business, and that sitting inside Lennar, it was kind of a poor stepchild to the main business. So they knew that it was a dying asset. And that was important because they felt like to really monetize it, it had to be married with something. And they looked at States Title as kind of the future of the industry. And they thought, if we just sit around and do nothing, States Title is going to take this industry by storm. And so it was one of those things where they said, okay, we'd rather, join them than beat them because they weren't going to beat States Title. And I think they made a very smart decision to basically take a minority stake in States Title for contributing to the business, and then also take a seller note. And so basically provided debt for the transaction, which we will pay off over an extended period of time. Because there's no way that, a company like States Title with, we had maybe $20 million in the bank and 30 employees, and States Title had $200 million in revenue and 1,000 employees and, $40 million of EBITDA. There's no way we're going to be able to use our cash to buy that. And if we just gave them stock, we'd be giving up majority control of the business, which we didn't want to do. So the ultimate solution was seller financing.
Yeah, I think painting the picture of how fast technology could help startups dominating an industry is really strategic. In terms of States Title, can you tell us more about the innovation of this company to the industry?
I think it's there's really two parts to it. Both are technology related. One is kind of process automation. Like it's a massively inefficient industry and business today with faxes and PDFs going back and forth. Lots of human labor, lots of touch points and inconvenience for all the parties involved. The title people, the escrow, closing agent, the lender, the buyer, the seller. I mean, everybody suffers from really a very old and poor technology stack. And so the ability to kind of stitch all that together makes all the sense in the world and needs to happen. Maybe not, that's not a unique insight, but it needs to happen. The second piece was rethinking the title insurance piece and how you underwrite title insurance. And because the claim rate of title insurance is so low, very, very, it's about 4% of all premiums of title insurance get paid out in claims, right? And in health insurance, it's 80%. In property casualty, it's 70%. This is 4%. So you have very few claims, but you have all this manual underwriting processes that are very labor intensive that have a lot of cost to them. And Max's unique insight here was to apply machine learning to make an instant decision as to whether to underwrite a title insurance policy or not, knowing that it's very infrequent that there's ever a claim. And to get his hands on the data was very difficult, to then prove it out was very difficult. But it's a very unique capability today. It won't be a sustainable advantage forever, but it's certainly an advantage today. So when you combine the ability to rip out all of the cost of underwriting for a title policy, and you pull out a whole bunch of cost associated with the manual processes of escrow and closing, then you have a really compelling competitive advantage.
Yeah, title is just one part of the home purchasing experiences. You're the expert in investing in fintech related companies around home purchasing experiences. Based on the current innovation, what do you see as the future of home purchasing?
It's going to take a little while, but it will absolutely occur completely on the phone. You're going to search for the house. You're going to learn about the house and the neighborhood, the square footage and the construction quality, and the neighbors and the comps. You're going to get access to the house and maybe even connect with an agent. You're going to submit an offer on your phone. You're going to negotiate your offer. You're going to negotiate the contingencies and the period. You're going to eventually choose escrow and title and closing, and you're going to buy and you're going to notarize and sign all on the mobile phone. And it's going to happen really seamlessly. And it's going to be a dramatic change to the experience today. And you're probably 18 months away from that.
I really like what you said about automation. Looking at the current home buying startups, I saw two trends. One is companies that are building tools around the agents, like the company Compass. They're building software around the agents, putting together all the applications maybe needed by an agent into one system. On the other hand, we have companies trying to replace the agents with their own platform. Curious, how automatic could the whole purchasing process be? Do you see any human component stays in the picture?
We've seen a lot of industries eventually succumb to technology. Financial brokers, they're still brokers, but there are far less than there used to be. This is one that everybody's pointed to eventually is going to happen, and it hasn't happened yet. But yes, it will. But I think people have to appreciate how long it takes for that transition to occur. Mm-hmm. And so kind of being the arms dealer to real estate agents, as Compass is doing, mm-hmm. I think is a great and big business with 2 million real estate agents in the market today. Mm-hmm. That's probably got a 15-year life to it. For 5 years from now to 100 years from now, mm-hmm. probably the fully digital mobile experience is obviously going to eventually win out.
For sure. I think any transformative innovation takes time. Going back to investing, whenever there is a company that's transforming an industry, most likely will be very popular among all VCs. How do you position you and your firm to be the right investor for the startup company?
There are a handful of very successful fintech-related investors who I have a lot of respect for. And I think it's perfectly rational that an entrepreneur would choose them over me or me over them, depending on whether it's the series C or the A or the B. We all kind of can play in those different spots. We all have different size checks we can write. And I think it comes down to a bit of personality fit mm-hmm. And what the entrepreneur is looking for mm-hmm. as to, kind of who they feel the most comfortable with. I'd like to believe that for the few folks that I have a great deal of respect for that I compete with, mm-hmm. that they would also reference very well through their network of portfolio companies. But at the end of the day, it comes down to, I think, just comfort with the individual.
In terms of helping portfolio companies to grow, which company do you think you are the most involved with? And what function do you help them the most?
We talk about this. We talk a lot about Foundation Capital, about the fact that we all as partners have different skill sets. Mm-hmm. And I'm mindful, having been an ex-operator, that the board should never be managing the company. Mm-hmm. And that our job is to kind of supplement and help where we can, whether that's help in sales and marketing or in UI design and product speccing or building an engineering team or regulatory, whatever it is. Mm-hmm. That's all helpful. But I think more importantly than all of that, those little bits of help that you give along the way, to me, are the few very critical strategic decisions that the companies often need to make. Mm-hmm. That are those bet your company decisions you have to make, the strategic decisions. And I feel like that's probably my strong suit of all the things mm-hmm. I could be helping with. It's mm-hmm. actually the few things that I'll say and suggest where I really am coming with a very strong point of view. I don't do it very often. Mm-hmm. I try not to influence too much. Mm-hmm. But I would say that if you talk to my CEOs, they'd probably tell you that I'm more strategic mm-hmm. than I am tactical, and that's where I want to spend my time with them.
Can you give us an example of a time that you gave strategic advice to one of your portfolio company?
Well, I remember I had a very specific situation with Renault at LendingClub mm-hmm. that he reminded me of at the IPO party mm-hmm. because I was congratulating him, like what an amazing job he had done to build this business. And he said, mm-hmm. no, I need to thank you, Charles, for all of your help. And I just thought that was comical. I was like, Renault, I come to board meetings, you tell us how great you're doing. And then I come to, and then a month later I come to the next one, you tell us how great you're doing. Like, you got to be kidding me if you think that, there's any reason to suggest that I have any credit with this business. And he reminded me of a very specific instance, which was when I was a new board member. Mm-hmm. I remember coming into the board meeting, and he went through his the status of his unsecured consumer lending product, mm-hmm. and then he talked about his plans for auto lending, student lending, medical lending. Mm-hmm. And I kind of sat there and I was like a bit confused because all the other board members were like, yep, nodding their heads saying this is great. And I said, Renaud, when you pitched me, you told me that this was an $800 billion market. consumer unsecured lending, going to $1 trillion.
Mm-hmm.
We've done, I don't know what, $50 million of loans, whatever it was.
Mm-hmm.
So I said, Renaud, either, one of a few things are either true. Either you're wanting to launch these new products because you believe your existing market isn't $800 billion. Because if it is $800 billion, it's such a big market, why would you spend time doing anything other than that one thing?
Mm-hmm.
Or you're telling me you don't think you can win that market because you want to go do these new things. Or you're telling me you're just a CEO who doesn't know how to focus. Which one of those things is it? Because I find it hard to believe that we should be doing anything other than consumer unsecured lending. And he went back and he shut down every one of those projects. And, the company was at risk of being massively defocused. And in the end, the right decision was to stay focused on his core product because he didn't have a market size problem. If you have a market size problem or you have a competitive problem, I can understand wanting to go open up new markets and new products, but he didn't have either. So why would you be doing that other than lack of focus?
Yeah, I think it's a really good advice itself. Being an entrepreneur, tackling a really tough problem could be discouraging. It's easy to lose focus. It's really nice that as a board member, you could help the CEO to focus. Speaking of losing focus, a lot of time it's because of a competitor comes into the picture. If someone tries to copy what your portfolio company is doing, what would you suggest them to do?
Well, if you're a startup and you're competing with a company that has infinite resources and a distribution advantage and a brand advantage, and I'd say you got to go elsewhere. I would never say go elsewhere if your competitive set are other startup companies. Because if it's a good idea in a big market, either there can be multiple winners, it may not be a winner-take-all market, and you have to have confidence that you can out-execute.
All right, we're at our last section of this episode, which is SVP tips. This section contains 3 questions. The first one is, who made the biggest impact in your career? The second one is, who would you invite to your dinner party? The third question is, what's the best book you've ever read?
I think John Malone, who the new generation of entrepreneurs don't know, but he and Bill Gates grew up together in that era, and he was an amazing man and brilliant. And his particular strength was he was always able to look at both sides of an issue. He would take one side and then he would spin around and just take the other side. And he was really trying to view every situation from both lenses. And I found that to be incredibly powerful. And by the way, there are a lot of people have written lots of books about TCI and John Malone, worth reading. And I read a book years and years ago. It was a random book I picked up. I was like running through an airport, and it was on one of the, it was just sitting out as like a bestseller thing, and I grabbed. And it was rumored at one point that it was going to be made into a movie, and that they had even cast Johnny Depp as the star. And I don't know, who knows whatever happened to it, but it's called Shantaram. It's a true story about a guy, an American who is arrested for a very serious crime and flees the country, and he ends up maybe he was an Australian, I don't remember. And he ends up moving to India and living in the slums of India. And over a period of time, he becomes a doctor and does some pretty amazing things. And it's just a very inspiring story about one person's ability to kind of overcome and to change their life. And I hope it someday gets made into a movie. It was a phenomenal book. Shantaram. Yeah. What interesting people would I invite to my dinner party? I think it would be for me. I have a soft spot in my heart for people who overcome and achieve like just tremendous things. And whether it's like a musician, like a Bruce Springsteen would be phenomenal. I have such respect for him and his whole career. Or a competitor like Michael Jordan, who distinguished himself because of his sheer mental strength. To somebody like a Warren Buffett, who's just had such brilliance for decades and decades. To me, it's people who have been able to achieve something so notable because there's some unique aspect to them that is kind of pegged at like 100 out of 100.
Absolutely. Thank you so much for coming onto the show today, Charles.
Well, great, Grace. It was a pleasure chatting with you.
Thank you so much. That's all we have for today. Thank you so much for listening to this episode of Smart Venture Podcast. If you like it, please hit subscribe so you don't miss any tips from the experts. If you want to see more behind the scene, please go to smartventurepod.com. If you want to connect with me, all my socials are at GraceGoneGG. Beside LinkedIn, it's just Grace Gone. See you next time.